Alice Cavalier, very nice to have you at IPEM, partner, co-head of capital solutions at ARCMONT, and Arnaud, PIENS, partner, French team, also with ARCMONT. Thanks for joining us here at IPEM. How are you finding conversations? What sort of conversations are you having?
Yeah, look, thanks for having us. It's a great opportunity. Look, we're having a lot of conversation. There's obviously a lot of people, a lot of investors, and a lot of potential investors that are here. So obviously for us, it's a great opportunity to meet a lot of investors to talk about our strategies and the outlook, obviously, and also some of our peers, and also all the private equity houses that are also here. So for us, it's great because we see our investors and our clients, the private equity communities, and our peers.
So tell me, Alice, a little bit about the ARCMONT business, and then obviously capital solutions, if you would.
Yeah, so ARCMONT has been created nearly 15 years ago in 2011. The original strategy was the direct lending strategy, and obviously fast forward to a capital solution. A capital solution is an adjacent strategy of ARCMONT, to the direct lending. So original strategy is the direct lending, which is very much focused on vanilla sectors, vanilla resilient sectors, and vanilla transactions. And as the years passed, we figured out that there was a lot of opportunities that were slightly too risky for the direct lending, and hence why we launched Capital Solution, which is looking at higher return, but also higher risk type of opportunities, and that is therefore very complementary to the direct lending, because obviously we are doing what obviously where they stopped. We're obviously investing in transactions that are slightly more complex, that are stuff that the direct lending cannot do.
A real expansion, really, of the mandates. Arnaud, tell me a little bit. I mean, you tend to be focused on France and the French team. We're here in Paris today. What sort of trends are we seeing in the French market at the moment?
The French market is the second LBO market in Europe, so it's a key geography for us. We've been invested since 2015 in France, and since then we had a very good momentum. We invested more than 5 billion euros since 2015. And the market continued to be very attractive for us. We see all the same trends that we experience elsewhere in Europe, where initially direct lending was a substitute to banks and became more and more a substitute to public market as well. And we continue to experience a very good momentum in 2024. So it's a very attractive market, and it's a key market for us.
And you think the appetite for direct lending continues, not just in France, but generally across all geographies?
Definitely. For the last 2 years, the public market to be shut down. And basically the sponsor had to finance the transaction with private debt. And when they have experienced private debt, they don't really come back to other sources of financing because they have benefited from the flexibility, the availability of private debt. And I don't say that private debt will do 100% of every of all the markets, or transaction, but still the gain of market share is very strong. We still estimate that 80% of the transaction today are financed with direct lending, while actually the public market has reopened.
Yeah, really interesting. It makes me think a little bit about the role of the banks, Alice. Maybe you can enlighten us a bit about how does direct lending, how does private credit more generally interact with the banking sector? Is it a competitor or is it a partner? What's your take?
It's a bit of both. So I think it's obviously a competitor because sometimes you choose between obviously having a banking solution and obviously a unitranche solution, and unitranche being provided by the direct lender. But it's also a partner, and actually in many cases it's a partner because even when you do a unitranche, you need a revolving facility, and this is something the direct lender will not propose, and therefore you'll need a bank for that, and therefore on the direct lending side we always work with banks as a partner for the revolving facility, and also even in my strategy we also work a lot with banks because often we offer subordinated debt alongside senior debt that come from banks. So definitely yes, in some places it's a competition, but it's also most of the time a partner.
And interestingly, we see more and more banks that provided RCF to us to take as well a portion of the unit tranche because I think it's a very good instrument. So that's why I think, we
A
really
symbiotic relationship in a way
Exactly.
between the banks and the private credit. Could we just switch a minute? And I know you're very busy people, but I wanted to just touch on fundraising for a minute. And obviously, I won't ask you about your own fundraising. But what do you think the environment is like generally for fundraising right now? A lot of reporters in this conference asking exactly that kind of question. What do you think the environment's like?
I would say that the fundraising, the private debt asset class is very attractive for investors because basically you benefit from a double-digit yield while you invest in a senior secured instrument at low LTV, 30-35% LTV. You also benefit from investing in very robust businesses, and clearly the direct lenders are focused on this kind of, as Alice say, vanilla transaction, very strong industries, and it's a very good hedge against inflation. And on top of that, you have less volatility than in public markets. So I would say there is a strong appetite for the private debt, and especially in the upper end of the market, which is particularly attractive, and where we are lucky to be.
And interestingly, I think I would add that you've seen the stat. I don't know if you've seen it, but Preqin has been releasing some numbers, and actually 90% of investors in the private debt are actually willing to either keep the same allocation to private debt or increase. So definitely, I think they're quite happy with private debt asset class as an asset class. They want to continue to invest, and even they want to grow because obviously there's the direct lending strategies that have been the first stone of a tower, and then now we're adding adjacent strategies that LPs are interested in. So obviously special sit strategies, but also NAV financing, impact financing that are other stone of this private debt asset class, which is obviously growing, not just in the direct lending, but in also sub-new strategies.
Yeah, well, you mentioned NAV finance there. That seems to be in the news quite a lot at the moment. People are looking at the distributions, they're looking at, ultimately use of funds and things like that. Do you think that that's a real sort of a sign of the maturity in a way of private credit and NAV finance as sort of one of the latest tools in private credit, that we're having so much attention paid on these relatively niche products?
Yeah, no, for sure. I think it's maybe harder for private equities nowadays because we're in a more mature asset class to make money, and therefore they are trying to find ways to make money and to engineer a bit more, I guess, their structure of capital themselves. And obviously NAV it's an efficient way as well to fund their capital in a better and most efficient way and get returns out of it. So I think yes, it shows maybe the maturity of the private equity. And obviously, credit, obviously the private asset class being creative and trying to obviously reply to the need of the private equity community, I think. And obviously for us, it's very adjacent strategy because when you think about it, it's the same clients. We have a very strong relationship with the sponsor community because we've been working with them on the direct lending for 15 plus years. And therefore, because NAV is actually your client, it's the same sponsors that we're doing unitranche with, so it makes sense for the private credit funds to obviously develop these type of strategies, because obviously you're speaking to the same person for a unitranche than for a subordinated debt and for obviously a NAV financing.
Well, Alice, Arnaud from ARCMONT, thanks very much for talking to me.